Good morning, I am Kevin Price. Delighted to be with you. Going to spend some time talking to you about you and your business. As you know, I have been doing a lot of interviews and discussions about the mid-market business sizes, business companies out there in the mid-market space. And delighted to have Jonathan Homeyer with me. He is with Wells Fargo Bank, and we're going to spend a little time talking about the mid-market. You're the EVP, Executive Vice President and Division Manager. Is that a geographical division?
It is. My geographic responsibility is for what we call the South Texas region, which is really the greater Houston area and Point South.
Okay. And how long have you been with Wells Fargo?
I have going on 19 years, all with Wells Fargo here in the Houston market.
Very good. Kind of give us an overview of what you're seeing happening right now in the mid-market companies.
You know, it's an interesting time for middle market businesses. It is a great time to be a borrower. Coming out of 2008 and the Great Recession, the banking system is as well capitalized as it's ever been. And our balance sheet, speaking for Wells Fargo, is as strong as it's ever been, and we're looking for good homes to put good capital to work to help to continue to grow the American economy.
Okay. And it seems like we're right at the cusp, though, of potentially some tightening of the money supply, which obviously has a ripple effect on interest. Your thoughts on that?
Well, I think if you are a term borrower today, there has never been a better time to lock in an interest rate. And there's really three elements to that. You're right. We are at an historically low point in interest rates. We've been in a zero interest rate environment for going on 5 years now, something that's historically unprecedented. This was due to the Fed stimulus coming out of the Great Recession in 2008. There are signs, and there's talk of the Fed tightening, as you mentioned, Kevin. And the economic data, while there are some cross currents in the data that's coming out, it all points to a strengthening economy. And so we anticipate rates will rise, whether it's the end of the second quarter, the Fed pulls the trigger on that, or it gets deferred out because some of the noise in the numbers that we've seen recently. But the third element of that really makes it an incredibly kind of a once-in-a-lifetime opportunity, if you ask me, is the fact that the yield curve is so flat, and there seems to be such an influx of capital from around the world into the U.S. Treasury market, pushing the 10-year rate down to unprecedented sub-2 levels, which means for a borrower today, they can lock in at rates that we may never see again in our lifetime. Right,
which explains why the dollar has become extremely strong.
Absolutely.
Both a blessing and a curse, depending on if you're in the importing or the exporting side. So talk a little bit about the attitude among mid-market companies when it comes to potentially expanding through loans and that type of thing.
Well, I think, we visit with our clients on a daily basis, and those relationships are the bedrock to our business. So we hear we're seeing cautiously optimistic signs within the market. Of course, the energy market here in Houston has a few issues with it today, but
a little chill at least.
A little chill, and that spills over to the broader economy. My segment is not specifically energy, but we feel a little bit of it. But I've lived in Houston my entire life, born and raised here. My dad was in the gas pipeline business. Houston's just an incredibly resilient economy, and we'll get through this no matter what. The marginal price of oil and gas is.
Mm-hmm. Yeah, and it's interesting to see, and it's not 1985 where 70% of the economy was linked entirely to energy, but it's still pretty heavy. It's going to be interesting to see what happens. I don't expect 2015, unless something happens quickly. The passing of the Saudi king could change things a little quicker, and we know that their policies were only temporary. How long, we don't know, but at some point they're going to wake up and say, wait a minute, we're practically giving this stuff away. They can't do that forever.
Yeah, I can't really speak to the international politics of it, but it's always been amazing to me that a slight supply-demand imbalance in oil can drive a 50% drop in prices in a relatively short period of time. That said, the Houston economy is much more diversified than it was in 1985. There is a huge amount of capital that's being committed to petrochem projects on the east side of town. The job growth that will come out of that will have some buffering effect to that job loss that may occur in the upstream energy sector. So I think it's interesting times, but I think on the whole, it's probably not going to look a lot like 85 in the depths of it. So yeah. I'm optimistic. It'll have some hiccups and some pain points along the way. But we'll get through this and move on.
Yeah, and I think internationally, obviously, what's happened in Saudi Arabia is something of a player. And I believe energy prices are almost entirely driven by speculation, not by much else. But I think probably the whole fracking situation, which has made North America very energy independent. And most people don't realize that most of the Keystone Pipeline has been in existence now for over a year. And so for a year, we've been getting really cheap or cheaper oil from Canada, and that's been happening even without the XL.
Right, and I leave the analysis, the energy markets, to my colleagues who focus on that on a daily basis. But there are going to be marginal projects that are shelved as a result of this, and people are going to be examining the economics of each of the fracking basins, and each basin, each field within the basin has different economics depending on what the lease terms and the cost of production are coming out of those fields. So.
What are some of your areas of expertise? What do you focus on?
We're generalists. We focus on middle market companies. They're family-owned businesses, multi-generational family-owned businesses on up to publicly traded companies. And it's a variety of industries. It really keeps the day interesting for me. It might be a widget manufacturer, anybody that manufactures or distributes something into a wholesale market. That space we play in. Distribution of petrochemical products, petrochemical manufacturers. That's a part of our business as well. So it's really a broad scope of things, even into the restaurant space and a more consumer-oriented spaces, which are really going to get a lift, I think, out of the decline in energy prices because consumers are going to have more dollars in their pocket to spend. That may not have the local impact that we're looking for, but more nationally, I think it's going to be a buoy to the economy as a whole.
I'm Kevin Price, visiting with Jonathan Homeyer. He is the Executive Vice President of Wells Fargo Bank. That's wellsfargo.com. And what do you think about 2015? What does it look like from a mid-market perspective?
I think we're going to see continued growth in our business. Our business has grown dramatically since 2008. At Wells Fargo, we've been in business as a company since 1852. We don't look at short-term hiccups in commodity prices as obstacles. We don't manage for the next quarter. We manage for the next decade. And we're excited. We're going to keep doing what we do to grow the business and grow the American economy.
Very good. If you want to get more information about Wells Fargo, I encourage you to check out wellsfargo.com. Thanks, Jonathan.
Thank you so much. Pleasure to be here.
You bet. When we come back, much more for you. I do want to remind you, best content here shows up over there at usdailyreview.com, the national news website. While there, like it on Facebook, follow it on Twitter, and you're listening to The Price of Business.